Amazon tanks while stocks in Europe and the U.S. are headed higher. As a matter of fact, it's a 6-month high in close in Europe. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Wednesday, the 1st of February. Well, here it is, February in Maryland, 60 degrees, unbelievable. We'll be covering a lot of stocks. We'll be looking at Amazon. Why did it tank today? We'll also be looking at Whirlpool, BROADCOM, and Marathon. All stocks on the move today. So let's go to the markets right now, but don't forget, don't fight the market, move with the market. Let's go right to our portfolio manager. First stock up, Amazon. Look at minus 100, down 8%, 8.67%. It's actually down over 10% earlier today. So let's just go to the charts and see what's going on. So here's a daily chart going back 1 month, but let's take a bigger look in the picture. And a couple of things you can see right here. One is the monthly at 181.51. That's on December 13th. We were signaling problems for Amazon back then. Now, it didn't happen right away, but obviously today's action pushed it down while the majority of stocks are up right now. But I think probably we're at a lower range. I think Amazon's probably trying to build its business and sacrifice margins right now for a bigger payout later on. Whether that's successful or not, we don't know. But I do order things from Amazon myself. I'm sure you probably do. A lot of people do. Whether that's a sustainable business model, we'll just have to see. But right now you can see the trend. Basically, if we just put my telestrator on, I can show you very quickly what I would see in this market. Just from a trading vantage point, you had the, first of all, there was the double top right here, the pivot point. So you measure from this point right here. And if we take that line across, it takes about, let's say, around 200, just for argument's sake, up to 240. So that's 40 points. Subtract 40 points from this gives you 160. And the low we had here was 166, maybe close enough, but certainly in the area around between 160 and 170. I think that's going to be a good support area for this market. So that was the pivot point right here. The move down, as we've seen. The monthly trade triangle, which is negative. No rush to buy this. I give it lots of time. If it rounds out, it could round out for a couple of months and then start to go up. Then I'd want to be a buyer. So let's see how that works out in the future. But for now, I would just, there's no reason to jump in or try to catch a falling knife, as they say. So let's go to our next market. The next market's going to be the S&P 500, which is up today. It's a plus 600. It's actually a plus 100, but a couple of things happened today. One is you had the PSAR, which is the parabolic stop and reverse, actually kicked in today. You can see the little dot right below there. In fact, if we go to a 3-month, will give you a better view, but it just reversed today. This is actually a very good, if we close up here at 1328, that's probably going to be a new high close. 1326 is the previous high close, so it's going to be a new high close. And as you know, we've been bullish on this market since the January 10th from 1292. It's interesting, we just did a poll, and half the people were bullish in the poll, and half the people were bearish. It was amazing, even split there. So I think, generally speaking, with European stocks closing at the best levels in quite some time, there's talk of a possible Greek deal. We've heard that before, but maybe it's a little more realistic now. So everyone's going to take a haircut on those bonds, but that doesn't matter because the perception is the market's going higher, and with a plus 100 reading, we have to believe it. Now let's go to our next market, which is a little bit different. This is on the silver market. We have a plus 60, which is a trading range. And this is the level I want to watch, the 33 level. Right now, we're sort of trading between 33 and 34, resistance at 34, support at 33. If we go below the lows that we see here for the last few days, there's a parabolic there at 33 and change. I think if we go below that level, I think that's going to be a really sticky wicket. I think we'll see this market take some pretty aggressive profit taking. And I think the other thing, what you can draw is, I'm going to draw my trend line on here from the lows right here, and I can draw that pretty much to that level. It's not perfect, but it's close enough. So I don't think we're going to collapse, but generally speaking, silver tends to move very quickly on the downside and grudgingly goes up on the upside. So I would think probably 33 is the level in the sand for a lot of traders right now. They'll pull the trigger and take profits if it goes under that level. So going to our next market, which is gold. And here you see gold is pretty much the same level. We set the 1750 levels, big resistance. We sort of just checked there today. The high was 1750.77 on the spot market. Our monthly trade triangle is negative. Weekly positive, a mixed signal, plus 70. Not a trading range, but not yet a negative divergence yet on this thing. So we're at the top end of the range. We think this is going to turn down, but the level I'd probably be looking at more so than anything else today would be the low that was seen here at 1718. So I think that's the level I would want to watch, certainly. Certainly the 1720 level is going to be watched closely, but you see the PSAR is, this is the little dots we talk about. The PSA is developed by Wells Wilder. It stands for parabolic stop and reverse. 1705 is the number there. Much closer on the silver. So let's see how that works out. Look at the next market. It's copper. As you know, we've been bullish on copper. The trend is clearly up with the monthly and the weekly positive. We're plus 85, strong trend. The PSAR is above the market, but this action today is looking very good to me. You've had the pullback, like a mini pullback. And I think we may consolidate a little further, but I think we'll see this market go much higher in the future. Remember, copper is a reflection of the economy, the world economy, and that seems to be getting better, at least psychologically, day by day. So let's see how that works out. So next market is going to be the crude oil, and we're looking at the March crude oil. And this market is just kind of, it's a 55. You see the reading there, minus 55. It's just in that trading range. We have a 55, as I said. You got the monthly up, weekly down, daily up. Very, very choppy action. You can see for the last, it looks like 10 days, we've just sort of gone sideways. We need to get conclusively over the 102 level to really get this market going on the upside, and possibly we need to get it completely below sort of the 96 level to get this market really on the downside. So in this sort of limbo land right now, I think the odds are favoring the longer term monthly trade triangle, which is still positive, and I think that's going to be a pop to the upside. That's my take on this market right now. So let's go to the next market. Next market is going to be the Eurodollar, and as you can see, the Eurodollar popped right back up. It's 131.83 right now, so it just reversed from the lows. Not much to say about that. Our long-term monthly trade triangle is still negative from 139.69. The weekly is positive, so mixed picture there. Really, I think sidelines are probably the best way to look at this thing for the time being, and we'll see how that plays out. Next market is going to be the US dollar index, obviously the inverse. It looks like we made a new low here. Very mixed, 55, a trading range. It can go low. We're looking, actually, we have some levels we're looking at in that market on the Fibonacci levels. We're looking for a pullback to the 78.26 and then the 77.43 level. They're Fibonacci numbers, so 78.26, if you write that down, and the 77.43. They will both represent a 50% and a 61.8% pullback. So that's an area I think the dollar could find support. So looking at our next market, we're looking at the CRB Reuters Jeffries Index, Commodity Index. This is a mini pullback into a Fibonacci zone. I've got it here, right, 311.67. Let me take that off the screen for you because it just gets a little bit, take that off. It just gets a little bit confusing with these lines. But generally speaking, this has come back down. We did not expect it to come back down because we thought we had made the turn, but our long-term monthly trade triangle never kicked in, so that's still negative from 335. These are the big markets you want to look at. When you see our monthly trade triangles change around, they don't change that often, but when they do, you need to pay attention to them because it really does make a seminal shift in the marketplace in psychology and the concepts and perception that the market's going to go higher. So let's go to our next market, and we're going to look at some stocks that are on the move. Whirlpool, for example. I want to show you this because it shows you two things. One is our weekly came out here, so we were basically short. So we basically, take this off the screen, we got out at 50.81. The market's currently trading at 63. Now, did we know it's going to have a huge move today? No, we did not. But what we did do, we weren't short the market, number one, and we avoided this move up, just like we missed the move down in Amazon in terms of being long the market. We didn't want to be long because the market was telling you it was going to go down based on our trade triangles, and we'll look at that in just a second. But this is telling you the market has made a turn and it's going higher. Now, the original buy point is 56.29. It's 63.35. You couldn't have bought it at 56.29 because the market gapped open, but certainly you could have bought it on the opening, which was 59.13. So you'd have a several dollars profit. But I think given this market some time, I think it's probably going to go higher. So that's definitely on the cards in our books. So let's go to our next market. We're going to go to BROADCOM. Same thing there. New highs on the BROADCOM. 36.25, a new monthly trade triangle kicked in. Everything's a strong trend. You can see the weeklies and the dailies all from much lower levels. That's the key thing. You're not going to get the top of the market or the bottom of the market, but when the market makes a turn, you're going to be in the right direction, and that's the key thing to remember. You don't want to be caught flat-footed and take a big loss. That's just not the way to trade. So let's go to our next market, and that's Marathon Petroleum. Now, this is broken out. Buy signal 39.55. It's 41.07. I would give this market a little more time, but you'll have a chance to buy. Now, we're often asked, Adam, should I buy when you first get a signal? I would suggest buying half your position when you first get a signal on the monthlies. Then if you see a pullback, add the other half of the position. So I think that's always a good plan. Sometimes you don't see a pullback. It's not unusual, but it can happen when the market just takes off on a signal and doesn't come back. It's pretty rare on the monthlies, but generally speaking, patience is the key thing to these markets. But as I said, we were basically out of the market at 34.95, saying we were basically out of our any short positions we would have had in this market. And if you don't trade the short position, you'd just be out of this market anyway. You would have come in today. But going back just for 1 second, looking at Amazon, and this is what I wanted to share with you, is look, we were basically out of this market because we were basically, the monthly trade triangle was negative from 181.51, so we were only taking short signals as opposed to buy signals. So this was basically come out, it was a short signal here, 181.51. Cover that at 184. That would be a small loss if you're trading on the short side, but you certainly would have avoided, if you were long, a big push today like you're down, as I say, over 8% right now in Amazon. But hey, lots going on. We have a show tonight, but also you may want to consider personal one-on-one Market Club coaching. Is it right for you? The only way to tell that is if you give us a free call at 877-219-1482. Again, 877-219-1482. The call is free, and it's a free consultation. So don't miss out on that, folks. Hey, we'll see you a little later on today. Have a great day trading, and lots going on in the market, so don't miss our show tonight. We'll talk to you later.